Hello. Not stressful at all getting locked out of my own meeting.
Hey, Sophie.
Hey, I was like, I'm going to be late in 1 minute. Hey, Stu, how are you?
Good, just enjoying the Yorkshire sunshine. Missing
Hey,
London.
Sophie. Hello.
Hey, Monty. Thank you
Hey,
for joining
Stu.
us.
Hey, Mons.
Whereabouts are you, Stu?
So I just moved up to Yorkshire 3 months ago, and I'm trying to live a hybrid, cool, trendy life in London and a relaxed family life up in Yorkshire.
How's that going for you?
It's a big change. Like it's a really big change. I've literally moved to the set of Emmerdale Farm. There's like 15 houses in my little hamlet, and everyone like is really nice to each other and friendly versus London. So I miss London, but it's just a big adjustment.
Well, I would say I had 3 people smile on me at in my run yesterday in London, and I don't run very far. So London is definitely getting friendlier, like actual smiles.
No, I know. I don't know. Maybe I've made a massive wrong decision, really expensive wrong decision. But time will tell.
If you need a new mortgage, I could give you a really good recommendation for a company. I mean, it's probably a bad time to tell you, or maybe a good time to tell you, I moved out of London to Exmoor for 6 years and then back to London.
Oh no, this is like the 20th person since I've moved up here that's basically said exactly the same.
I think if you can have a balance, but I am actually going to move out of London again, but I'm going to move to Margate, I think.
Yeah, it feels like all of the cool trendies from East London are moving to Margate that way. The property market around there is so hot.
Really? That's interesting.
Yeah, Margate, it's getting like the East London cool, like Shoreditchy vibes. You can't afford to live there anymore. They're all heading out Margate way.
Yeah, one of our clients has just done a big development there on the beachfront. It's an old hotel converted into flats.
Oh yes, I think I know what you mean.
Yeah,
It'll be making a pretty penny.
Yeah, it's unbelievable.
Well, if you need a plumber, my husband's a plumber, so get in touch. Anyway, we should probably talk about freelance mortgages at some point. I kind of forgetting to do this because, you know, it's our first, this is actually our last event in our first ever season of events, but it would be remiss of me not to say that issue 5 is out now. So if you don't already subscribe or you haven't already bought it, do buy it. I'll put the link in the chat at some point. If you have any questions, we've got like a ton of questions. I think there's going to be a bit of an overlap. If you do have any more, put them in the chat and I'll try and sort of check if we're going to get to it anyway. I'm going to do a bit of spiel about Coreco because they're so kind to kind of come along today and help us all with all our questions. So let me tell you a little bit about Coreco, and I'm going to put the link in the chat as well. And about Stu and Andrew, or Monty, aka Monty. So Coreco is a leading mortgage brokerage set up 13 years ago, and it's multi-award winning. They're renowned for demystifying the mortgage process and putting the client at the center of everything they do. They're not your traditional suit and tie broker, and they speak like normal people in a jargon-free way to help their clients understand the biggest financial commitment that they're ever going to make. Moving to Yorkshire, no, a mortgage. So yeah, the jargon free and speaking like normal people is obviously fantastic. So Stu, as well as being a highly experienced mortgage advisor, he also runs the Coreco Mortgage Education Service. So that's brilliant for us today. Lots of education for us on mortgages. And Andrew Montlake, aka Monty, he's been in the mortgage industry for 26 years. He's the MD of Coreco Mortgages, and he's regularly quoted in the media with appearances on BBC and Sky and Freelancer Magazine. He was in issue 3. And he's also a closet rock star, apparently, singing in the band.
That's very much to be debated.
So your band is Rogue Monkey.
Yeah, I thought so. Thank you very much for all of your questions. I've had a read through them all. I think what's probably a nice little cute idea is for Monty to have a quick chat about Coreco, and then me to give you like a little bit of a little sort of blurb about contractor mortgages and freelancer mortgages and how they're viewed, and then we can go into the questions if that's cool.
Of course. Yeah, absolutely. That sounds great.
Over to you, Monty. Sell Coreco. Go.
Sell Coreco, hey? Well. As as was said there, so I've been in the industry a long time, and we started Coreco in 2009, really, because we really did think that there was a better way to offer advice. We saw so many brokers who were hiding behind suits and ties and hiding behind jargon. And we wanted to do things a little bit differently. We wanted to be really down to earth, ban jargon entirely, and really talk in a way that everyone really understands, and to inject some personality and even a bit of fun into the process, because mortgages can be dull and boring, but they don't necessarily have to be. So we're obsessed with the welfare of our clients and our culture. That's something that's very important to us. And we grew really by proving ourselves with introducers, estate agents, and having a high PR visibility. We were the first mortgage brand to really embrace social media, to do blogs and podcasts, etc. And we're now, as it stands this year, we're the top most quoted broker in the industry and national press at the moment. We're all over the press today in various different things, talking about the latest house prices. And we have some amazing lender relationships. That's something that's been really important for us. And the focus on education, what Stu is doing, is something that's it's really personal for us. It's we believe financial education is something that's really important. And what we do is actually we go into a lot of companies like UBS, Goldman Sachs, Saatchi & Saatchi, Sony, Global Radio, and we provide educational seminars or lunch and learn sessions to really help educate people.
Okay, that sounds amazing. Thank you.
Cool. Okay, so can I jump in? Are you done?
Yeah.
Okay, cool. So basically, yeah, I've been broking for like over 12 years now. Monty's my boss. So the term contract mortgage, freelancer mortgage, self-employed mortgage, there's lots of kind of umbrella terms for everything. And ultimately, using a broker, we work with lots and lots and lots of different banks. So I think we used something like 94 banks last year. Importantly, all banks will look at different forms of income. So you'll find that some banks will look after, some banks will use 2 years limited company accounts. Some will look at 2 years sole trader accounts. Contract mortgages or freelance mortgages can then vary down more. So if you don't want to use that set of income, you can use things like day rate. So what some lenders do will, if you're a day rate contractor, they will look at your day rate, they will times it by 5, and then they will either times it by 46 or 48 weeks. That's called a day rate contractor mortgage. Then there are other contractors or freelancers who move from contract to contract to contract, but are taxed at source and use pay slips. So I think the world of banking is quite archaic. It's quite slow. Everything takes a long time to catch up. So in the olden days, everyone went to work, they were all employed, but the world has moved on. The freelancers, self-employed space is growing and growing and growing. And banks have taken a little bit of time to sort of catch up with that, but they are getting there. So it's kind of interesting right now because there's so much competition in the market. There's loads of new banks, there's challenger banks, you've got banks like Metro, Starling, etc., that what everyone's having to do is sort of think how they can lend to you. It's not a case of, oh, you're a freelancer, you're self-employed, we don't want you. It's a case of what can we use to lend the money. So the reasons for that is twofold: competition, but also when the credit crunch happened and the world ended, banks got really told off by the governing body of all banks, which is called the FCA, and they said that they needed to hold more money to be a sort of safer bet. So banks have got a lot of money that they really, really want to lend out because that's how they make money. So if they lend you money for a mortgage, they charge you a fee and then they charge you an interest rate. If they lend you credit cards, loans, hire purchases, that's how they make their money on the retail arm. So banks they highly want to lend money out. So I think what I want to just sort of recap is that it was really difficult a while ago if you're self-employed freelancer contractor, but it's much, much easier now. And there are many, many different metrics that banks will use to assess how much you can borrow to your affordability.
Okay, that's fab. Thank you for that kind of overview. And the first question on my list was, which was a bit of a silly question really, is will it be impossible for me to get a mortgage as a freelancer? So I think we've covered that. And, hopefully there's going to be, the banks are only going to get better and better as it goes on. But yeah, as I said, we've got like a ton of questions. So I'm going to whiz through them. There's definitely going to be some overlap, let's just get going, I think. So the first question is what are the key things to consider when applying for a mortgage? And maybe we can kind of do, if you were looking to apply for one in kind of the next year or so, and comparing that to what are the key things to consider if you're thinking a bit further ahead in the future?
So, Monty, I'll just
go.
So we live in a world where everything is computerized. So the very first thing you need to do is check your credit. Check that your credit file is looking good. Check all your addresses are correct. Because when you're applying for a loan of hundreds of thousands of pounds, the first thing a bank's going to want to do is check you are who you say you are, check you're on the electoral roll, and have a look if you've been clean with your credit. Before all of that, if you've never had a credit card, the single biggest bit of advice I'd say is to take a credit card out, use it every month, pay it off every month, because what that does is it demonstrates to a bank that you're good at looking after a little piece of money. Therefore, they're more comfortable to lend you a lot of money. So I would get your credit file checked. There's free ones out there. Equally, you can have quite a free 30-day trial and then cancel it. The second thing you do when you're getting a little bit nearer is check all of your documents are correct. So that would be checking the addresses are all the same, things like that. Like some banks, in fact, sadly, too many banks are still looking for paper copies of everything. And then when you get even, and you've obviously got things like saving for a deposit as well, which is the most important bit before anything really. Then when you get even nearer to applying for a mortgage, sort of 6 months before, start to really look at your budget, start to clean out your bank, look at your bank statement. So look at any kind of dodgy spending. So if you're applying for a mortgage and you've got a load of Betfred, like betting transactions, they ain't gonna like that. So sort of try to clean up your your bank statement. Also, if you've got any loans, credit cards, hire purchases, they affect how much you can borrow. So the sooner you can pay them down to ever what you can do, you're going to be able to borrow more money.
Oh, amazing. That is such good advice.
The only thing I'd add to that is around, is obviously in a shop, he would say that, wouldn't he? Is definitely get advice, especially if you're a freelancer, because there are a whole wide range of lenders out there that a lot of people have never heard of. There are a lot of broker-only lenders. There are a lot of specialist lenders who are basically set up to deal with self-employed freelancers, contractors, in a way that some of the high street banks aren't. And a good broker will have access to all of those. And also be ready to have a conversation with your accountant as well. Actually tell them in advance that this is something I want to do. I want to get a mortgage in the next 6 months or 12 months or 2 years. So you can work with your accountant to actually show the income that you need in order to satisfy a mortgage lender.
Do you know what might be can I just briefly talk about what my job is as a broker? So my job as a broker is clients come to me and they want to know, how much can I borrow? How much is it going to cost me? My job as the broker is to get to know you, your affordability, your attitude towards risk. And then my knowledge, I know which banks to go to, especially for self-employed people and freelancers. So some banks don't like you, most banks do like you, but they've got very, very different attitudes to how much they'll lend you. So my job as a broker is to meet you, understand you, and then go to the banks and find out what's possible.
Okay, great. And I mean, a lot of these questions are a little bit specific, and I understand obviously you won't be able to give specific individual advice today, but I'll sort of ask them anyway, and we can talk a bit more generally, or yeah. So just leading on, I'm trying to sort of do them in roughly in some sort of order. You did mention about kind of credit cards and betting, but one of the questions was, are there any general things freelancers can do to maximize their credit score? So are there any other things that you can think of?
So freelancers will have no different credit score to somebody employed. It's not specific to your industry. Don't miss payments, make sure all your data is correct. And if you haven't got a credit card, take a credit card. It's the same advice.
Okay.
The most important thing is to make sure that all your bills are really paid on time. And if they're not set up on direct debits, it's definitely worth it. Because what you'll be surprised about is how many, I think last year there was something like 1.2 million county court judgments issued to people. And a CCJ, as it's known, it basically comes when someone misses a payment on something. And typically a lot of those are for really small amounts, 50 quid, 60 quid. Most of them are mobile phone companies, because they're really quick at putting a mark against your name on the credit file if you're overly late or you've missed a payment. So really make sure that they are paid on time. A lot of people think, oh, it's only 30 quid, it doesn't matter. But you'll be surprised how many issues that causes.
That's not to say banks won't lend to you if you have like,
No.
a checkered credit history, but you pay for it.
Yeah, it actually just happened to my friend that he was trying to get a mortgage and he had a parking ticket from like years ago or something then, and that was flagged, you know, so it was just a bit of a problem. So pay your parking tickets. Okay, so another question is, what if you get turned down? How does that affect things?
If you get turned down, then the first thing is again, don't panic. It doesn't mean that it's the end of the world. As I said, there's so many other lenders out there. It depends why you get turned down. If it's for some credit issue, then potentially that's, as Stu says, there are other lenders out there who can help. It might be just because, as Stu said before, different lenders will accept different types of income and look at things in a different way. So one lender might look at net profits in a different way. Some will look at retained profits. Some will look at operating profit, etc., etc. They're very different ways of doing it. So if you've got turned down from one lender, or typically a lot of freelancers tend to just gravitate to their bank, their existing their bank straight away, because they think, oh, I've got my bank account there. They understand me. Unfortunately, a lot of times they don't. Because they're not a specialist lender, they're more of a factory approach, and you might need a lender who actually can look at a set of accounts, can understand your business, and especially if you've got a broker to go through it first of all, who can present it in the right light to the right lender first off, then that's going to make all the difference. And we get clients all the time who are, I've been declined by my bank, they wouldn't give me a loan. When actually we can help them, and an expert like Stu looking at it can present it in such a different way to the right lender that it does actually go through. So I wouldn't panic and think it's the end of the world.
It's not too big a deal, to be honest with you. It happens for many different reasons. So ultimately, I want to get your mortgage agreed first time because it's less work for me, it's comforting for you, and it's just easier. But various different things do happen, and declines do happen on a daily basis. But you always have a plan B, C, D, E.
Okay, so I know you've said it can vary quite a lot depending on your the mortgage provider, but typically how many years of accounts might you need?
So ideally 2. But we've got banks that will look at 1 year's accounts.
Okay.
What that does though, it narrows. So yes, 1 year accounts, you can come to me. Out of the 90 banks typically that we work with, probably 5 maybe would look at 1 year's accounts. 90 would look at 2 years accounts pretty much. So it's possible. You're not going to have as much choice, so you might not get the very cheapest mortgage, but there is the Halifax will do 1 year's accounts.
Okay.
Have you got anything to add on that, Monty?
No, I think that's spot on.
So would it make a difference if you're a sole trader or a limited company?
Me or you?
Go on.
So with a sole trader, they use one figure to work out your affordability, and that's your net profit. When you're a limited company, if you own 100% of the business, banks can take different views on how to look at your affordability. So some will look at salary and dividends, some will look at operating profit and add your salary back in, some will look at net profit. So you're still both mortgageable. If you're a limited company, you have more avenues to get a bit more money, because basically everyone wants to borrow as much as they possibly can because houses are so freaking expensive. You're more likely to get a mortgage either way. It's just you can be a bit more creative with limited companies. Just going back to what Monty said with how to talk to your accountant. So quite often with me, what I'll have somebody who's self-employed, and they'll come to me and go, here are my accounts, what can I borrow? And they might be midway through their accounting year. So actually what I will do is I will then work with the accountant, because the client will come to me and say, oh, I really want to buy at 500. And I'll be like, well, you can only borrow 300 because your accountant's offset all of this stuff. So I can then work with the accountant and be like, look, we need to achieve a more realistic net profit of this, for example.
Okay, that's good advice.
And yeah, there are also a couple of lenders who will look at retained profits, which a lot of people don't realise that. So if there's money within the business that you're just not taking because you think you don't need it at that time, or you don't want to pay tax on it, then that can be taken into account in the right circumstances.
Okay.
And you've got your day rate contract mortgages as well.
Okay. Okay, I'm moving on more to the questions that have been kind of more specific questions, but again, maybe we can answer in a more generic way. So someone's put, I'm looking to go freelance soon. Am I better off staying in full-time employment until I've purchased a property with my partner? Note, he and I already both own separate properties with mortgages, so I'm not sure if this makes things slightly easier for us.
Go on, Monty.
Well, I think it's an interesting one. If you're both in full-time employment at the moment, then I would say yes. It's going to be easier rather than if you've just newly become self-employed or freelance, because as Stu said, most lenders will want to see that you've been freelance for, or you've got a set of accounts. There are some differences to that, but there's
a bit of a caveat to that.
Yeah.
So if, for example, you've been an employed TV producer, for example, and then you move to a contract when you're on a day rate, you can more easily, if you're staying in a very similar industry, doing almost exactly the same job, but you swap how you pay and it's contracted, then there are ways around that. However, if you were going from an employed writer of a magazine to a self-employed writer, when it's like the income can be quite bitty, then they're going to want to see accounts.
Okay. Okay, another question. The fixed 5-year rate on my mortgage ends in December 2022, and I need to transfer the mortgage in my name following a separation. The current lender isn't likely to do this as my freelance income is not high enough. Are there any particular lenders that might be more flexible, or anything else I should think about apart from increasing my income?
Yeah, you need to talk to us. That's the long and the short of that. There's a lot going on there. So I wouldn't really want to give advice on that, but you can remortgage 6 months before the end of your fixed rate period. So you need to be talking to us now. Yeah,
we've got kind of quite a few questions like this, like different, like I'm thinking of going freelancing, I'm not, or was employed when I got it, or I mean, presumably one question here is, I'm new to freelancing, my partner is full-time employed, will I be able to get a mortgage? Will I be able to get on the mortgage if we apply in the next year? So I guess if they haven't got a year's worth of accounts as a freelancer,
they can still go on the mortgage though. It may be that you just can't use their income, or maybe you can. Like I said, if they've gone in and they've got a 6-month contract on a day rate, then we can get you lending, but you can be unemployed and still go on a mortgage.
Okay.
Look, I think there's a bit, I get asked these sort of questions a lot, and there's sort of two bits to it really. Like a lot of people kind of are done with being employed and want to go freelance or want to go self-employed, and you've got to kind of be happy as well as sort of striving to get a mortgage. So quite often, you can find people will unduly stay employed because they want to get a mortgage, but then it might take them ages and ages to find a house, for example. So they're kind of unhappy at work and have sort of delayed something. So there's a couple of different bits to that really.
Yeah, and what about if you are a sole trader and maybe in the last year or so you've transferred over to a limited company, is there a way that you could still take into account both sets of kind of income?
Yeah, so high street banks, HSBC, Santander, all really cheap, really risk averse, don't do very much fun stuff. Just below that, building societies, they're sort of the same. Then you've got a tranche of small, tiny little building societies. For example, Saffron Building Society that has 6 branches, or you have Dudley Building Society, and all of these quirky little building societies. And you would be able to you would be able to put a business case forward for lending to one of those guys. It wouldn't be easy, but you could do it. I could do it.
Okay. So Joe's put in the chat. So we've been talking a lot about 2+ years of accounts, but what counts as accounts? As a sole trader, I currently complete my own tax return. So I know my annual net profit. Do I need accounts put together by an accountant on top of that?
No, we can use your tax return for that.
Okay.
Yeah, that's fine. You can print off your SA 302's tax calculations and etc.
Computations.
If you've got those for the last 2 years, that's absolutely fine. Because
you've submitted them to HMRC, and therefore we can print them out and prove to a bank this is what I earn.
Okay. So at the moment, can you say anything about? Thumbs up from Joe, thank you. At the moment, can you say kind of where the best sort of mortgage, what the best mortgage deals lie for the self-employed?
So all of the big banks will do self-employed people, and they're all sort of fairly. We're in this really, really, really weird world at the minute. The property market is insanely hot. Properties that are priced well are going on the market and selling really quickly. And like you've got interest rates, war in Ukraine, there's just so much going on. But essentially, banks aren't priced all that differently. There are certain lenders that I would not go to if I had a self-employed person. At the minute, I wouldn't go to Santander. They're not very good. But then you've got people like Coventry Building Society who are really, really good with self-employed people. But it changes all the time. Banks change their criteria, they change their affordability, they change their rates almost daily. So the advice I would give you today wouldn't be appropriate for a week. So there's no go-to banks at any one point, but there's current banks that I would much be happier placing self-employed people with.
And just to put that into some perspective, you can get 2-year fixes now from around about 2.23%, and 5-year fixes still under 2.5%. In fact, what's weird at the moment, we're in a really weird situation where actually, if you're looking at the very best rates, a 7-year fix is actually ironically cheaper than a 5-year fix at the moment. So we're in a really.
So can you explain that a little bit more? Like explain it to me like I'm 5, as we like to say, with one of the.
Don't bore them, Monty. He'll love this.
Sorry.
Yeah, explain because.
You're gonna love this.
Okay, only because I'm thinking. Okay, yeah, because
sense.
It's fixed. No, I get it. I think I understand it. I was thinking, oh, it's longer, so it would be cheaper, but because it's fixed, it wouldn't.
No,
but please explain it.
It should, in a normal world, be more expensive.
Yeah. In a normal world, basically fixed rates are priced by most lenders on something called swap rates, and swap rates is like the future value of money. So you'd usually expect that your 2-year cost of money would be cheaper than your 5 or your 10 or your 15-year cost of money. But we're in a really weird situation where you've got inflation raging, you've got a war in Ukraine, you've got the cost of food, fuel, energy, etc. in a bit of a crisis, and you've still got the COVID hangover. So we're in this weird position at the moment where actually the money markets and the people in the city think, do you know what, it's a bit shit for the next couple of years, but actually it's going to get better. So at the moment, the money markets are thinking it's a bit riskier now. So the next 2 years, actually, I think they're going to have to put interest rates up a little bit more aggressively than they would otherwise. And that's what we've seen them do. So interest rates were 0.1% 12 months ago, and now they're 1%. And a lot of people think that they're going to increase interest rates even further. So potentially we can end the year with interest rates about 1.75% or even 2%, and increasing a little bit further next year. But then people think actually the inflation problems at the moment aren't going to last forever. They're going to be bad for the next year, maybe 18 months, and then actually things are going to ease, and actually it's going to come down again. So actually looking forward into the future, they're seeing that actually in 5 years' time, actually, it might be that we can bring interest rates down again. So it's an ever-changing thing, but it's a real weird position to be in at the moment, where actually the cost of 5-year money is cheaper than the cost of 2-year money, and that's being reflected by lenders in their interest rates. What I would say, what's really important, is a lot of people are getting carried away with interest rates are really expensive. They've doubled, they've tripled, they've quadrupled, they're going up and up. Historically speaking, interest rates are still really, really cheap. Even if bank base rate goes up to 2.5%, if you look back in history, that's a really, really cheap rate. So I never thought that we would see 5-year fixes below 3%. A year ago, we had 5-year fixes below 1%. That's how cheap this environment is. So even though rates are rising, what you'll actually find is when you're actually looking for a mortgage and the monthly mortgage payments, the payments themselves are still quite affordable. The problem for a lot of people is raising the deposits, because house prices are still really high. So it's an interesting environment at the moment.
What percentage deposit are you sort of looking at typically?
So the minimum deposit you need is 5% currently. At 5%, you're deemed quite a risk. You're more risky by the bank, so they'll charge you a higher interest rate. Then at 10%, your interest rate comes down, and then at 15%, 20, 25, you've pretty much got the same rates available. But yeah, you need a 5% deposit. So
if, say, your interest rate was 2% at a 15% deposit, what might it typically be at a 5% deposit?
3.5-ish months.
Yeah, it's probably, yeah, you're looking in the early threes at the moment with 5%. Now, of course, if you're looking
5 years ago, that was like more near a 6%.
Yeah,
5% deposit.
If you're looking at a new build property, for example, and you're a first-time buyer, you can still access the Help to Buy scheme, which is a government scheme where actually the government will give you a 20% loan if you're outside of London, or a 40% loan if you're inside London towards your property. So if you're buying in London, for example, you need a 5% deposit, and then you get a 40% loan from the government, and then you only need a 55% mortgage. So that works quite well for a lot of people. There are a lot of bells and whistles, and you need to understand the ins and outs of what taking that loan from the government actually means. But it can work for a lot of people, and that's just as available to self-employed people as it is to employed people.
Yeah, I think I always used to think it was for like key workers or something, but
there's also a couple of companies out there that will loan you money at a much higher rate, so about 8%. But because you're borrowing quite a small bit of money, when you take, say, 20 grand on 8% and then £280,000 on 2%, by the time you kind of water it down, it's actually not that expensive. So a couple of companies that have started doing that. You're restricted to which banks you can use them for. Banks, it's still quite newish. It's essentially the Help to Buy loan, but privately. So for the lower deposit people, there are a couple of other companies out there. Additionally, what was I going to say? Can't remember.
I was going to ask, do you know what the interest rate is on the Help to Buy scheme? Or
yeah, It's so basically it's interest free for the first 5 years on the loan, and then it increases by the rate of inflation each year. So at the moment that's relatively high. But after 5 years, it goes, it's 1.75% interest increasing by the rate of inflation, and that 1.75% per annum is divided into 12, and you pay that monthly. So that's how it works. The key to bear in mind is if you borrow 20% from the government, and when you come to sell the property, the government will want 20% back. So if the property value has increased, they want 20% of the increase as well. So a lot of people miss that point. Likewise, if it's gone down in value, they'll share in your loss, so to speak. They'll only want 20% of the new value either way.
So Help to Buy is available to first-time buyers. Is there any other stipulations? Only
first-time buyers. There are regional lending caps. So if you're in London, you can't buy anything more than 600,000, and they're regional caps across the country, really, different caps. But apart from that, that's about it. You have to put in 5% deposit. You have to be UK based. You have to be a first-time buyer, and you have to be buying a new build property.
Okay, great. I'm feeling very proud of myself, because like 5 years ago I wouldn't have even been able to have this conversation. So I'm feeling like a real adult now, that I even understand some terminology. But it's kind of good to be the person that asks the stupid questions, and I'm just asking the questions that other people are thinking. Okay, so I've got another question that's quite individual, an individual problem. Will contacting your current lender about a change of situation, i.e. a relationship breakup, ahead of time cause issues? I.e. when the mortgage was put in place, it was for 2 adults, one self-employed, one employed. But when the mortgage will come up for renewal in a year's time, it's probably going to be for one of those adults, self-employed. The other adult is still financially contributing but doesn't live at the address. Just wondering if there's anything positive that we can do a year ahead of remortgaging. Bless you.
I mean, yes. So, okay, where do I start? This is really boring, but you need to chat to a broker, because I wouldn't. So because I know what some banks are going to say and what some banks aren't going to say, I would kind of want to have a chat with you about what the plan was, what your situation is, what the future looks like. I wouldn't contact a bank before speaking to me. But from the sounds like it's going to be fine, because if both parties are still contributing towards the mortgage, then as long as if there's not a huge cost elsewhere that the other partner is taking on, then it should still be okay, right, Mons?
Yeah, I mean, the issue might be is if you need to, in a year's time, actually remove the other person from the mortgage. So sometimes that causes an issue if the lender then looks at your income and deems that's not sufficient to.
But I think they said they were still going to contribute, no?
Yeah, if they're still going to contribute, and for example, that's maintenance payments, then they can be taken into account. Especially if that's backed by a court order or something like that. So that again, it sounds to me like you probably won't have too many issues. It's good to plan, so to speak to someone first. The earlier the better, and see. Let's have a look at what your income is and what your income will need to be to take over the mortgage. If the other person wants themselves removed, but there are various ways to do it.
I think it's like I've been doing this job a really, really long time, and life happens. People have babies, people get divorced, people change jobs, they go, and because the job of a broker is I have to sit down with you, I have to understand you, I have to know when you're going to get pregnant, it's quite a personal job. So what you'll find is my clients that have been with me for years and years and years, whenever anything's happening, like, oh, we're having a baby or we're going through IVF, they will call me almost before they do that next that next step so I can tell them the what the downfalls might be, what the positives might be, and how we're going to fix it. So yeah, when you do buy a house, use a broker, speak to them about everything, because they should have the knowledge to give you that advice well in advance of when you actually need to do it.
Okay, that's good advice. Get advice.
I'm 50% mortgage broker, 50% counsellor.
Well, that's added value, isn't it?
He's my personal counsellor.
Well, there you go. That's definitely another
Full-time
selling
job,
point. Was having a midlife crisis of starting a rock band.
Who's midlife?
Well, I think
later life.
I'm only 25. It's hard in the mortgage industry.
Me too. Yeah. Okay, so back to this 2 years of accounts. Okay, so they've said, how do your earnings affect what you can get? What if I have a really good first year and make less than, I mean, it's all relative, isn't it? It depends if some people think,
That's a really good question, actually.
But what if you, have a good first year? And I sort of think that I, have set up a new limited company recently for the magazine. And, I guess it's like you can afford to pay yourself, but often you're paying yourself minimum wage and you might be taking dividends as well, or things like that. So yeah, what kind of 2 years, but what if one's good and one's bad, or the first one's good, the second one's bad, or the first one's bad and the second one's good?
So different banks will look at different scenarios. Some banks will look at your most recent year, and that's what they will base their affordability on, especially if it's lower. Some banks will average the 2 years, and if you've got reasons why, then they might be a little bit more flexible. Crucially, accounts are, you can submit your accounts as long as they're not longer than 18 months old. So if you've got a good year's accounts and then a bad year's accounts, as long as if you're not 6 months more, you can submit the previous year's accounts to get the higher earnings. Does that make sense?
Say it again.
Do you want to explain that better, Monty?
No, it wasn't. I think I just.
So if you've got 2 years accounts and one's good and one's not so good, and either way round, it really depends on the lender. So some lenders will look at an average of the 2 years. Other lenders might take the latest year, especially if it's so there are some lenders where actually typically if you set up your own limited company, you've had 1 year which is meh because it's the first year, and then the second year it's all taken off. Then that's not necessarily a problem, because there are lenders who will understand that, some of the specialist lenders, and they might take your second year, and that's what they base their income multiples on, especially if you can get some kind of projection.
Yeah, so if you're midway through if you have a good year, then a bad year, and then you're midway through another good year, you can get an accountant's letter to say, we expect the gross profits be this, the net profits be this, and banks will look at that as well.
A good example of where this came into play was during COVID, where obviously a lot of self-employed businesses had a downturn, and whilst there were some lenders who went, whoa, we're not touching anyone self-employed, actually there were other lenders, and certainly coming out of it now, there are some lenders who will go, do you know what, we understand the COVID year was bad, we understand it, so there are a couple of lenders who will just ignore it, as long as they can see a bounce back now. And,
I think I heard on the Which podcast that some lenders were penalising people that got the government help.
Yeah, they went through a period where they were doing that, and there was a lot of outcry from people like us actually saying, I remember going on the BBC about it and saying that was not the spirit within which the help was intended. Because when the Chancellor gave all these help, he basically said categorically, this shouldn't affect your mortgage finance or this type of thing. And a few lenders started to get nervous and started to do that. I understand why some of them did it, because although all the bounce back loans helped a lot of businesses, there were also some potentially poor businesses that were only kept afloat because of it, and they would have probably failed anyway without COVID. So that's where the lenders were coming from with that. But they're now in a really good position again. They understand that. And actually, if you're a business and you've been through COVID and you're still here and you're still surviving and you're going back, then actually that says something really good about your business. That you can go through something like that and survive it and come out the other end. And yes, you might have taken some help. And also our line was very much, if the help's there, why the hell would you not take it? So
well,
we as a business took it.
Yeah, I think for the self-employed, it was kind of next to useless to some extent. So that's why a lot of people didn't take it. And I think, I mean, it was so hard to understand and it kept changing. But my understanding of it was that as a limited company, like all my clients were in travel and hospitality at the time. So I lost all of them essentially. And you know, my understanding was that as a limited company, if I took the help, which was, I don't know, say it was 500 quid a month, then I couldn't be like, you weren't allowed to touch your emails and stuff because I was the only employee in my business.
Yeah, that was furlough. That was a furlough scheme itself. So if you had furloughed yourself, then technically you couldn't work.
Yeah.
But things like the bounce back loans and the grants, you know, it was almost crazy for a business not to take those loans.
Yeah, I think as soon as COVID happened, everyone panicked and just said, whatever money I can get, can I have it? Because everyone didn't know what the future held.
Yeah, but that doesn't. Our problem was they were then deeming people who had taken that money as businesses who really needed it because they were in trouble. When actually every business took it. As I say, we took it, and luckily, touch wood, we didn't need it. But of course, you take it as a business because
you got yourself a lovely new range.
It's the cheapest loan and funding you're ever going to get, really.
Yeah. Well, it'd be silly not to as people who advise on that, wouldn't it? Okay, so I think we have covered this, but it's such an important point, I think, and it was another question. So I get that sole trader, you would just consider net profit. So the question here is, you know, if you pay yourself minimum wage as a limited company, which I know a lot of people do dividends count towards your salary? Could you just go through the things that as a limited company they would that they would take into account again?
Do you want to do it, Mons?
No, you can do that.
Okay. So some banks will look at salary and dividend. So they will use that to assess your affordability. Some banks will look at your net profit.
Yeah.
Some banks will look at your operating profit and then add your salary back in.
Okay, thank you. That's great.
And so what happens is I get set a set of accounts. Somebody says to me, how much can I borrow? I then know which banks are very good with, depending on how you paid yourself, because some people might not be necessarily taking full divvies, etc. So it's then my job to go to the banks that I think are going to lend you what you need, run affordability calculators, because different banks will lend you different amounts. So some banks are super conservative. We used to work on income multiples, like you used to borrow 4, 4.5, 5, 5.5, even 6 times your income. But now banks use an affordability model. So they all have these sort of dark art calculators where they will look at, some banks will use ONS data to assess your cost of living. Some banks will literally go line by line through your bank statements. So it's when I have the income, whether that's net profits from a sole trader or it's limited company accounts, when I've got your outgoings, then I will go to a bank and go, right, you can borrow this much with this bank, this much with this bank, and this is what it's going to cost you.
Okay, brilliant.
So my job is almost to do a bit of pre-underwriting. Underwriters are the people that work at banks that agree to lend you the money or not, and how much to do. So I sort of almost do a bit of that job for them, so that by the time they get the mortgage application, it should be quite easy for them to sign it off. That's the theory.
Okay, so a question again, you know, I'll just ask it. Okay, so obviously mortgage advisors want certainty that you can afford your payments. If some of your clients are one-off, rather than retainer, will this be used against you? I guess for me, it's the fact that freelancing can have so much uncertainty. You know, do you need to show them your business is sustainable for the long term? And if so, how? I guess that comes back to the accounts. But I suppose, I mean, I think that someone else has actually asked, you know, how do I not panic about work drying up when I've got a 25-year debt? So I suppose it's about, you know, I suppose that I didn't have much retained business as a freelancer. So, you know, even though I sort of had 8 or 9 good years of accounts, all of my clients were, well, that's not true. It was maybe not retained work, but it was one-off projects. So, I mean, will they just look at your accounts?
So yeah, so basically they look at your accounts because that's factually what you have earned and submitted to HMRC. Everyone's freelance or self-employed is really different, because you can have a 400 quid a day rate contractor that's been in the job doing the same thing for the last 9 years. But then equally, you might have a film director that 1 year earns nothing, but then earns 300 grand on a project. So, or, you know, you might get a director of photography that only works 5 days a month, but earns 2 grand a day or something. So it's all very different, but banks won't really look at your future, like contracts or retained work. What they'll look at is your accounts. It can help. So if it can help if I can sort of do a bit of a profile and a bit of a business case as well. But generally, no. The second part to that is what happens if I'm self-employed and I take out a massive mortgage over 25, 30 or 35 years. So above banks is a governing body called the Financial Conduct Authority, and what their job is, well, their job's a lot, but one of their parts is that they have to make sure that banks do whatever they can to stay in your house. So if you've been good enough to buy your own house and it's your main residence, banks have to do everything they can to make you stay in that. So what that might mean is they might give you something called payment holidays. So if you're not working, you can take a little bit of time off. What some banks can do, if you're on a repayment mortgage and your payments are £1,500 a month, they might be able to swap you to interest only for a period of time, for say 6 months, until the income picks back up. Equally, buying a house is super stressful and really expensive, and you have to pay lots and lots of different fees. But if ultimately it's not working, you can sell it. You know, it's not ideal, but you know, it's even though it's a massive commitment, if it's not working, you can sell it.
Yeah, and also you know, not saying that being employed is always better than being self-employed or freelancer, but you know, you can always go and get a job again as well, can't you? So I think we always think, oh my god, you know, I think especially when people are looking to take the leap from employment to self-employment, it's like, oh my god, this could all go wrong. And it's like, well, no, because you could, you know, if you really
go back and get a job
again.
Yeah, you can be working and get sacked.
Yeah, for sure.
Yeah, exactly. And I have seen clients who run businesses where actually things have got a bit slow, and they've gone in and taken an employed job for a while until things pick back up again, until they can devote some more time for it. But yeah, Stu said it is quite a daunting thing, taking out the biggest loan you're ever going to take out in your life. And you know, if you're employed, it's one of my biggest arguments with lenders generally, is actually why do they sometimes treat employed, so they might lend to someone who's had a job for 1 day and it's their first job, when actually they won't lend to someone who's self-employed. So because basically the risk is just the same, really, actually. And I'd rather lend money to someone who's got experience and running their own business and is invested in it than rely on the whim of, you know, I could fire Stu tomorrow. And
someone who can work more and earn more, which you can't do in a job, right? Like,
yeah, well, exactly. Yeah, absolutely. You know, if you're employed, it's very fixed. But actually, if you're self-employed, you can work more, earn more, master of your own destiny, really.
Brilliant. Okay, I'm gonna end on kind of one last question. I think all the other ones have got quite big overlap, and I know we've covered a lot already. So the last question really is, you know, do you see any recurring problems? And I just add to that, you know, like, is there anything kind of you wish you'd been asked today, or anything else that you'd like to add that you think would be helpful?
I think ultimately that if you're looking to buy a house, whether you're looking to remortgage, whether you're breaking up, whether you're having a kid, I think it's really important that you get advice, because, you know, brokers, me as Coreco, we're specialists at what we do. Coreco's in my opinion, unique brokerage. We work loads and loads with self-employed people, as I'm sure a lot of other brokerages do. So, but we have like a really good understanding of it. My husband's self-employed. He's been self-employed for the last 12 years. He still doesn't understand what a mortgage is, even though I tell him all the time. But get advice. I think when you're getting ready to buy, when you're getting ready to move, start those conversations. And especially if you're using an accountant, it's really important that your broker works with your accountant to help you achieve what you need to do. Yeah, it might mean that you pay a bit more tax, but ultimately you're going to get your sort of family home, and you know, paying a bit more tax and you can offset that by getting your family home. I think just some top level stuff about the market at the minute. It's literally mental. I just don't know. Why are you grinning at me? I can't remember a time when it's been this busy. Houses are selling really quickly because interest rates are going up. You're allowed to remortgage 6 months before the end of your fixed rate term. Sometimes people do that 3 months, 2 months, even a month before. Now, at 6 months, people are wanting to lock in rates. What that's meant is the housing market's really hot. Banks are really slow because they're really busy. Solicitors are really slow because they're really busy. And essentially what's happening is people are just moaning at me all day because things are taking ages. But we don't really know what the future holds because we haven't been through a Brexit, a COVID, a war in Ukraine, a cost of living crisis, and interest rates like rises, inflation. We've not really been through all of this, but I think some people are a bit frightened of buying a house right now. I personally think, due to the supply and demand issue, even if there is a bit of a drop in house prices, I don't think it's. First of all, I don't really think there will be. Monty, maybe I don't. Some people are doom-mongers and say, "Oh, it's going to drop loads," and sort of wait to buy. I don't really see that happening because they said that with COVID, they said it with Brexit, they said it. You know, the world's always ending in one shape or another. So if you're in a position to buy a house, I would, you know, for me, it's the best thing you can do for your financial security as a future, because rather than dropping 1,500 quid rent to somebody else's mortgage, you're suddenly paying £1,500 to your mortgage. And yeah, you're paying some interest to a bank, but you're also paying down your mortgage every month. So you're securing your future.
Can I ask a question? I know it's a bit silly. I feel a bit crass asking it, even though we're obviously talking a lot about money. But in terms of getting mortgage advice, that fee, do you pay a fee up front, or would that fee always come out of kind of your, you know, percentage of your kind of the house you buy or mortgage?
So we're professional brokers. We would normally charge an application fee, if you like, of around about £495. Now we like to say that's basically pretty much success fee because of everything we do before we actually would charge that. So we will sit down with you, we will spend hours with you, making sure we understand you, fact finding, making sure we understand your circumstances, and then making sure that we can put a application together to the right lender with the right product that fits your circumstances. It gets you the very best rate on the market. We're not tied into any one lender at all. We can look at the whole market and get you an agreement in principle with a lender, so you know actually that you've been advised correctly. You have recourse to us if we advise you incorrectly. It's another thing that you have with going through a broker. And we get you to that position where you know you can afford to buy the property, and more importantly, you can afford to pay the mortgage payments ongoing. So at that point, we'd normally charge a fee. We then hold your hand throughout the whole process. So I like to say that we're the fulcrum of the transaction. we're basically the one point of contact that's really working for you in the whole transaction. So we deal with the estate agents, we deal with the valuers, we deal with the lenders, we deal with the solicitors. As Stu said, we're your guide, your counsellor, your everything, to make sure that smooth process goes through. And I always say, if you have a good broker, a good solicitor, and a good estate agent, then 99 times out of 100, that process that's often deemed to be one of the top 5 most stressful processes you can ever go through actually doesn't have to be like that. And that's what we do. And then we will look after you afterwards as well. We see clients as a client for life. So we'll make sure that you're kept up to date with the latest movements. We'll make sure that, as Stu says, if you have a life change, we're there for you. And when your mortgage comes up for renewal, we'll make sure we scour the market to make sure you get the best rate for your remortgage. So it's a whole big process.
The general process is, you meet with a broker, they tell you what you can afford and what it's going to cost. You then go register with estate agents, get all of your online portals done. You then go out viewing. I will then, anyone who does a first viewing and is interested to go do a second viewing or make an offer, they will then send me the property details. I'll then ask a series of questions to check the property's price correctly, check the situation of the sellers, and let them know what I think about the property. And also I need to check it's mortgageable. You then have an offer accepted, and it's at that point you would then do a mortgage application, and then there would be a 495 fee payable. Equally though, sometimes you might be able to get something slightly cheaper if you go directly to a bank. And if you can do that, I will tell you, more often than not, people will pay the extra tenner a month or whatever the mortgages that I can offer, because just the process is so horrible when you go directly. But you know, we only ever give the best advice, and we give the client the best advice. It's a massive life commitment, you know, and you need to know, am I having a 2-year fix? Do I need a tracker? Do I need something flexible? Do I need a 10-year fix? So, you know, all of that happens when you've found the asset, the house, and you understand your client. So when you pair those two up, it's only at that point that I can say, this is the right house for you. This is who you guys are. And this is the right mortgage. So it's at that point of application.
Okay, so my internet dropped out a couple of times then, I think, but thank you so much. I think, you know, that's we've sort of dead on 3 o'clock now. I think that's a really good place to end. I think we've definitely covered everyone's questions. I know there's lots of kind of thank yous in the chat. I've put the links in the chat as well. Hopefully this will be recorded, so I'm going to share the recording. I know for the people that didn't make it, a few people have sent to me already. There's just been like so much information. It's been a really, really valuable session. So thank you both so much for your time.